tonight, the 6-year Cedi Bond has been oversubscribed by a little over 258%. This signals rising investor confidence in the economy following successful elections last month. There's more in this report.
Joy Business understands that government accepted all the bids worth 2.87 billion cedis because it needs money to close the fiscal space. The offer also received strong bids from both local and international investors, with the pricing aligned to the secondary market. And many analysts have described this offer as one of the successful in recent times amid COVID-19. If this trend continues, then the economy will be witnessing a sharp recovery compared with its peers on the African continent. The coupon or interest rate of 19.25% was 0.25% lower than previous rate issued 6 months ago. The sizable amount raised is expected to help government create sufficient buffer ahead of frequent upcoming maturities in March this year. Majority of the funds raised will be used to settle maturing debts, whilst few will be used to finance government business. Last month, the government accepted all bids worth a little over 176.4 million cedis for the 20-year Treasury bond and 1.66 billion cedis for the 3-year bond.
Well, joining me tonight, Dr. William Pepra, who is the head of finance at Valley View University, and economist Dr. Cedi Bond to discuss this latest news about our 6-year Cedi Bond. I'll begin with you, I believe, Dr. William Pepra. What you make of this? Very impressive.
Yes, I think it's, as you just said, it's very impressive. And it brings confidence into the economy. I'm sure the international community, following what happened after our election, have seen that Ghana is now of age. And this bond rate, if you look at it, over 258%, means that they have confidence in the Ghanaian system, especially our governance and then also the financial sector.
Dr. Bachi, you think same?
I agree, but with a caveat, in a sense that, sure, the financial market continues to feel that they can lend to the country. But on the other hand, the borrowing is being too much, and we cannot depend upon it forever. The news would be better if you are reading that the government has found means to raise revenue, or if it is that the government has found means to cut down spending, then it will be indeed a good news. But then just being able to borrow more is not necessarily good news. However, the financial market continuing to put their monies into Ghana is to some extent a good thing.
Okay, because I was going to ask how we should situate this in terms of our debts. Now, while this signals rising investor confidence in our economy, Moody's, for instance, is warning we may end up spending 50% of our revenue to pay for interest on loans. Dr. Bache.
Sure. In fact, as of 2018, Ghana was spending about 33% of all its revenue, including even grants, to pay interest alone. And let me tell you, Ghana was number 3 in the world. Number 1 being Lebanon, number 2 being, I think, Sri Lanka, and Ghana was number 3. By the end of 2020, based on the budget the government brought, Ghana would be spending about 48% of all its revenue to pay for interest. So it is continuing, and I believe Lebanon may be still number 1, and Ghana may be number 2 now. If this thing continue, by the end of this year, sure, Ghana will be spending not less than 50% of its revenue to settle interest payment alone. Amortization hasn't come yet. So it is something scary. While, after all, in the short run, you need the country to run, and financial markets still continue to lent to Ghana is something somewhat good, this cannot continue forever.
Well, there are some who think that for now we have no option but to borrow, but they're saying we should diversify when it comes to our borrowing options. You agree with that, Dr. Pepra?
I think Doc has made a very good point, but what I want to say is that government also needs money to run its business. There are two options for government now, either to increase the taxes so that revenue will increase, or you borrow from outside. Ghanaians, if you listen to what happened in the past and the government, the NPP government policy, their aim is to reduce taxes. So their option has been to go to the international market. That is why we've seen a sharp rise and also the warning coming from these financial institutions. All that we are saying is that government must be disciplined in its spending. But I am foreseeing that 2021 will be a major challenge because the president in his speech noted that they are going to continue the road infrastructure project, which means that government must look for more money from somewhere to run this policy. And it's something which is very worrying for us, and where I sit as a financial analyst, that the government must be careful, though there are pressures from institutions in terms of development, but this funding approach must be looked at. I also know you noticed that last year government tried to find a balance between borrowing from international market and local and the Ghanaian market, whereby doing about 50-50 of the borrowing. This government is doing this also to prevent the clouding effect. Also, we noticed that during COVID-19 the pandemic, international firms are also looking for countries with good plans or good investment strategies to invest. And Ghana has been found to be one. That is why you also see the oversubscription. There are some confidence that Ghana will be able to generate more revenue from the oil fields that we have identified. And also, let me put it, our commodity that we have. If the government is able to look for more commodities in terms of gold, cocoa, and the oil, there are other finds that they have looked at. It will be able to bring in revenue with our foreign currency to be able to pay these debts. So this is a major issue, but government must look at it very well.
I guess the question is, where do you look for the money then? I mean, when you keep borrowing, you make the point about the fact that, yes, we need the money at this point, but the difficulty is where we are going to get the money to make up for the funds that we sort of borrow from these lenders. Where do we get the money from, Dr. Boakye?
Oh, where do we get the money from? We get the money from two sources, broadly. One, cutting down your spending. When you cut down your spending, you make savings. But to be frank with you, cutting down spending has been a little bit difficult in the sense that the country is lumped in so much, because if you add amount of money the government spends on compensation of employees, amount of money the government uses to service its debt, and amount of money the government uses to transfer to statutory funds. When you do this, there's nothing virtually left for anything. Meanwhile, the government has, as Doc said, the government has promised spending on infrastructure and others. So cutting down on spending to make savings is a little bit difficult, but something can be done. We see a country that is cash-strapped like Ghana keeps on giving monies away to people in the name of social intervention. Social intervention broadly cannot be criticized if it is targeted to the poor who actually need them. But if you have a policy like free SSHs, whereby people who can afford to pay their wards fees from their own pockets are still being helped by the government through borrowed funds, then it becomes something that does not make sense. So some of the social intervention programs could be looked at again for savings to be made. Then, of course, the second source broadly is increasing revenue. But you have to be careful. You know, whenever we hear increased revenue, what comes to mind of people is that increased taxes. Why again to do increased taxes? It is the same government that introduced a policy of shifting from taxation to production, which I agree. Over-taxation is not what is right for this country. So we cannot increase taxes. Now, usually what comes to mind also is broadening the tax base. When you hear the word broadening the tax base, what comes to mind also is the informal sector. Let me tell you, not much can be gotten from the informal sector, in the sense that many actors in that sector earn incomes that are largely not taxable to begin with. So how do you generate so much money from the informal sector? In fact, what IFS has identified and the government should tackle seriously is the extractive sector, the mining subsector, and the oil subsector. If you compare the amount of monies government generate from these subsectors to other developing countries, you realize that the country is falling far below the peers. Because of that, we can learn from our peers how they generate monies from these sectors and be able to generate more to match at least their average, so that on revenue side, the country can generate, have more revenue. So that the borrowing can be minimized. That is the way forward. In fact, that is what our studies have shown us. The way forward is that at least you have to be able to match our peers in terms of money generation from the
I guess that government recognizes that it has to cut down on spending.